Hi, I'm Michael Leland of Mortgage Trust.
And I'm Matt Schubert, founder of Planned.
Matt, it's good to see you. Going to talk about getting finances organized today. And one of the benefits, obviously, of working with a financial planner is that they can help you organize your entire financial life. What, though, if somebody's not working with a financial planner, what steps would you recommend that they take to get organized?
Yeah, this is definitely one of the first steps you should do when you're trying to get your finances in order and manage them better and make it easier for yourself. So it's going to depend on the person. Obviously, some people prefer physical copies of everything. I'm more of a person who keeps everything electronic online. I just find it a lot easier to manage, and I just don't like having clutter. So depending on what you prefer, I'd say getting everything organized is definitely one of the first things you should focus on. So whether that's having a folder you keep everything in, or what I do personally is, and this is what I recommend for clients, is having either a drive on your computer, such as a Google Drive, or storing everything in a folder you have on your desktop, wherever you prefer to keep it. I tend to keep everything in one place just so it's a lot easier to find things when you need them. So a lot of these documents you don't need very often, such as like your insurance documents, estate documents, those things, but you definitely, when you do need them, it's important to be able to find them. So having everything in one place, that's kind of the starting point, but it's going to come down to personal preference on wherever is easier for you to keep those documents.
As somebody, in the mortgage business, we've often been accused of killing a million trees to get a mortgage loan through the entire process. Thankfully, a lot of that stuff can be done electronically now. But whether someone's handling their documents electronically or on paper, there's obviously a lot of stuff to keep track of. Can you maybe talk about the ones that should be kept, ones that are a little less relevant, maybe could be discarded?
I definitely would lean more towards keeping more than less, but there are definitely a lot of documents that I think people keep that they don't necessarily need to. One common example I see is bank statements. Obviously those aren't typically needed unless you're applying for a loan or something like that. And the great thing about today's world that we live in, and with technology and just having everything online nowadays, is you can always easily get those things from your bank. So a lot of times I don't even necessarily recommend keeping bank statements, since they're so easy to access through the bank that you bank with. So that's a common example. Obviously, anything that's expired, like for example, the auto insurance or home insurance, if that's an older policy and it's not even in force anymore, just staying on top of that and trying to make sure that all your documents are actually the most recent, most current document. That's another common thing that I'll see. But besides that, having everything electronic, I think, makes it a lot easier. And again, a lot of these companies nowadays will store a lot of these documents for you. So if you ever do need them, a lot of times what I'll do is just recommend keeping the logins in an easy place to reference, so that if you ever need to go pull your life insurance statement or anything like that, you can go to the provider and they'll keep all of that for you. And whether you need it for your current policy or you need some last year's tax return, anything like that, a lot of them will offer that for you. So making sure you know where to go to log into those portals is also important. So along with documents, you might not even need to keep them yourself.
A couple options here. One is folks can hang on to documents electronically. If they want to go entirely electronically, they could do that themselves, or reach out to every single one of these providers to get access to documents through each of the providers. But any other logical solutions for somebody?
One of the benefits, I think, that's often overlooked working with a financial planner or using one of the financial tools, such as what we offer here at Plan. A lot of these tools actually offer like document storage. So when you're working with a financial planner, you'll have a place where you can store everything. It's also beneficial because it allows your advisor or your financial planner to view those documents as well. So it's a very secure, safe place to store where you can kind of collaborate with each other. And the planner or whoever you're working with, whatever tool you're using, can also remind you of what documents you should be keeping in there. So that's kind of an added benefit of using one of the tools that either a financial planner offers or that we offer here at Planned. There's a lot of other tools out there that you can use as well.
So when we're talking about different financial documents to hang on to and be aware of, a lot of people think just, bank statements, tax returns, any other logical documents, though, that we should be talking about that folks should be concerned with.
Some of the most common examples are things like life insurance policies, especially if you have like a permanent life insurance policy. I think those are important to review regularly and make sure you kind of understand how they work. Um, Investment statements, retirement accounts, especially if you work for an employer, making sure you understand how you're invested and what the different options are there, as well as your kind of company benefits. I think a lot of times people aren't very familiar with how those work and if they have the right plan or not. So I think this whole process, not only just collecting and making sure you have everything organized, but kind of reviewing everything as well and making sure you have the proper coverage, you're using the right benefits at work, taking advantage of everything that your employer offers. I think those are all really important parts of this whole process.
So now that we've talked about the various documents, any suggestions about how people actually continue to track these types of things, track their finances, income, expenses, etc.?
Yeah, absolutely. I think a lot of these financial planning tools out there available. We offer this with ours as well, but plenty of options out there that'll help you kind of stay on top of this a lot easier. I think a lot of people tend to get overwhelmed with all the different documents they need and just tracking everything on a regular basis. So I think making it as simple and easy as possible is definitely the most important thing. The most obvious example is with these budgeting tools, having your transactions automatically pulled in from your bank rather than having to manually enter each one on its own. I think
Yeah.
that is a huge time saver. A lot of them, including ours, will offer categorization for you as well. So you're not going in there and having to figure out what that expense was for. So that definitely saves a lot of time. I think some other tips would be just email notifications for different companies and statements that you have, just to make sure you're staying on top of it. Anything that changes, you're getting notified of that. So I think just trying to automate as much as you can and simplify it is the best way to go. And I think a lot of these tools available nowadays make it much easier than it used to be.
So once somebody does get this all set up, gets it organized, any recommendations as to how often they should be reviewing it, how often changes or adjustments should be made?
Yeah, there's definitely a balance when it comes to how often you should be checking. I think a lot of people, especially on the investment side, tend to review their investments a little too often, and that can cause some emotional stress, which I know we'll get into in a future video. But I would say the ideal amount is, I'd say, at least once a month. That's kind of the recommendation I typically give. I think once a week makes it a little easier, but if you have kind of a block of time that you can set aside monthly, that works as well. On the budgeting side, I tend to prefer checking every week just because it's fewer transactions. It's a little easier to do. It doesn't feel as overwhelming when you go in there. And then if there's any transactions that you don't recognize, it's a little easier to remember what that transaction was for if it was within the last week compared to potentially 3, 4 weeks ago. So weekly for the budget, I think, is my typical recommendation. Everything else, once a month. And then insurance statements, I think you can check a little less frequently than that, every few months or so. So that's typically what we recommend.
It sounds like a lot of documents can be saved and viewed electronically, whether a client is doing that on their own, through a service like Planned, or with each individual provider. And then reviewing of those documents sounds like about once a week, but weekly cash flow budgeting types of issues, and then maybe monthly for the bigger picture stuff. Anything that we've missed, anything that we haven't touched on that you think would be important to mention?
One other thing that I wanted to talk about was kind of just the importance of having separate accounts for different purposes. So the most obvious example, the most common example that we typically use is separating out your savings goals from your checking account. So a lot of times when we have money in our checking account, we often tend to spend that. And so I think it's really important for people to have separate accounts where they keep their emergency fund, or whether you're saving for a trip or a home. I think it really helps, especially emotionally, and seeing that account grow and having it set aside for a specific purpose. I think that really helps as far as preventing you from touching into that money and using it for other purposes. So that's definitely a big thing. We always try to simplify and consolidate our accounts as much as possible. But when it comes to saving for specific goals, I think it's really beneficial to have separate accounts for those, and not to be saving for too many goals at once, but having those separated out so you can really track your progress towards that. And I think it just helps prevent you from tapping into those funds for discretionary spending whenever you feel like you might need to. So that's one other tip. But yeah, I think simplifying everything, automating as much as you can, setting up notifications for yourself, reminders so that you can track your budget, stay on top of everything, and not let it get to a point where it's overwhelming to come back into because you haven't looked at it for so long. I think that's kind of one of the main tips I can give.
As relates to creating separate funds, I work with a financial planner who has his clients create a mortgage side fund. Some of his clients want to pay off their mortgage more quickly, so they're interested in 15-year mortgages. And what he does is he encourages his clients to do a 30-year loan and take the difference in the monthly payment between a 15-year loan and a 30-year loan and invest it in this mortgage side fund so they can see that fund grow over time. And then if they ever feel the need to grab that money to pay off or pay down the mortgage, it's just, as you talked about, mentally, it's a different way of looking at things. And from a financially holistic perspective, just a way better way to invest and to grow your money, make your money work for you. So yeah, I think it's a great tip.
I think that applies to a lot of other scenarios as well, but I think that's a great way to handle it.
Matt, thanks so much for all the wisdom that you provided today. If you are out there and want to get more information about budgeting, about getting your finances organized, feel free to reach out to either of us.
Yeah, thanks so much for having me, Michael. I really enjoyed being on here and talking with you. So looking forward to talking in the future.